Hello again, everyone. In this technical analysis of the stock market video, I call it no fear yet, because that's exactly what's going on with this market. Right now, there's absolutely no fear in this market. We had a little bit of a stint in here in the Dow Industrials back into the end of January, where all of a sudden everybody got a little bit nervous. And that went away very quickly. The put to call ratios, percent of stocks above their 50-day moving average in the S&P, you can just go on and on and on. There's just the VIX, where the VIX at. We're going to take a look at that. There's just no fear in the market right now. And I think that makes the market vulnerable. Okay. And we're going to find out nothing stays like this. Nothing is that easy. And I know a lot of people keep saying the Fed's got our back. Every time we turn around, the Fed will bail us out. Yeah, well, we had the Federal Reserve, in 2008, 2007 too, and we had the Federal Reserve in the early 2000s, and on and on and on. I mean, it doesn't matter. The Federal Reserve's been around since, like, when was it? 1917 or 1918, something like that. Anyway, I digress. All right, so let's, the Dow was down on Friday, down 25 points. We're going to look at the Dow Industrials today. The market was kind of mixed on Friday. The S&P and the NASDAQ kind of eked out new all-time highs, but the Russell and the Dow was down. So here's the picture. We're getting some divergence in here on the RSIs. Okay, so the divergence showing up. We got a little bit of correction with this divergence. That's what happened here. This little high right here, this is January 17th. Okay, we're also getting the same thing on DI plus, the green line. We're getting divergence that's showing up in here. Okay, so if we take a look at the weekly we've had two very strong weeks in here back to back. The Dow was up 295 points for the week. Now this dotted line is the Fibonacci number, the latest highest Fibonacci number that we have on the Dow Industrials. And I've got a post on the website about that at joehenches.net. Talking about the Fibonacci levels in the Dow Industrials all the way back to 1929. Okay, so that is the picture there. Let's take a look at the Elliott Wave picture. This is what I've got in terms of the wave count right now. Let me zoom back out a little bit so you know what I'm talking about here. Okay, here's that December 2018 fourth intermediate wave low. Okay, and I believe we are now working our way up in the fifth and final wave since March of 2009. So now the real question is, how is this fifth and final wave unfolding? So I thought for a while that we had an expanding ending diagonal, but now the market has just been acting way too impulsive. So to me, what I think we're doing is we're trying to finish this third minor wave, then we should get a bigger fourth wave in here. Well, in the third wave, you need 5 waves up. Okay, so here's the 5-wave structure that I've got labeled in here. I don't think we have that fourth minute wave, you call it. Minute wave is the labeling that's 1 degree less than the minor wave. Okay, so wave 3 is a minor. This is what you call minute. Okay, so you just take it down 1 degree. So I think what we're doing right now is we're flushing out a fourth corrective wave in here, and that looks like a flat. That's typically when you would have a flat. There's no rule that says it has to be there, but typically in a fourth wave you're looking for a sideways type move, and right now it looks like we're getting 3 and 3, and the expectation would be for a fifth wave, for 5 waves to come down and complete this C wave. Then we'd have one more push up and complete wave 3, then a bigger corrective wave. Okay, so that is what I'm looking for. So you lay out this scenario and then you watch to see is the market playing along with that scenario. Is the wave structure doing that type of pattern? Now we look in the 195-minute charts. 195. Why 195? Because it's a 6.5-hour trading day, and that divides the day equally into 2 bars. So that's just an easy way of looking at it. Okay, so that helps give you the 3-wave picture a little bit more. Okay, and my 65-minute, which I call my hourly, gives us 6 equal bars for the day, and this gives us a little more detail into the move. So here's the high on February 12th in about the middle of the day or so, and then actually it was the last hour of the day. It was the last hour, last bar. Then the next day opened down, bounce back, and then we're coming down a little bit. Now this last hour of the day on Friday bounced back, so we'll see if this was just a little fake out before a 3-day weekend, or is there going to be a little bit of continuance to the upside there. We'll see on Tuesday. All right, so that's the picture. Yeah, the market is closed on Monday for President's Day here in the United States. All right, so that's the picture on the Dow. That's what I'm looking for. Now I talked about no fear. And that's let me go back to this scenario here. Okay, so I've got a red line at the 20 level because that's where a lot of folks get really excited and say the market is really, the volatility is really getting elevated when it gets above 20. And down here is kind of a zone that I've noticed is where it's been bottoming. The same kind of zone was happening back, last year in terms of where we were getting lows and it seemed like it would bottom on the VIX. So that's what happened right here. Here's that January 17th where I just talked about. January 17th, that peak, and then we had that sell-off. Okay, so let me go back down to the VIX. So that's that move that we had right here. But you notice we haven't come all the way back down here, even though the market has punched a new high. And the thrust that we had on the VIX was the highest level since October. So it's going to be interesting to see what kind of continuation we get. We're not seeing a turnaround yet. I mean, there's no turnaround just yet, but that could happen in a day. I mean, it doesn't take long. Okay, so that's the picture on the VIX. Let's take a look at the High Yield Bond Fund, HYG. This is another one I like to watch because to me, the High Yield Bond Fund, it tells me either risk on or risk off. And right now, over the last couple of weeks, week and a half or so, it's been saying risk on, and it's kind of in sync with the market. But you notice it has not punched to new highs above that mid-January peak. So it hasn't done it, and that's a little bit of discrepancy with the market. We'll see if that holds or not this coming week. Okay, so that's what's going on there. The last thing I want to take a look at today is SMH, the semiconductors. Let me bounce over to there. Take a look at SMH. Okay, here's just the regular moving average view and the candlestick view that I've got. We had a little bit of an ending diagonal pattern, or wedge, I guess. It's more of a wedge pattern that I spotted. And we had a throw over, and then we came back down with that move second half of January, kind of corrected all of that. And now we've thrusted up. But this also looks like a three-wave kind of move in here. So to me, what I've got is the Elliott Wave picture. Let me pull that up. Okay, here's the picture I've got on the Elliott Wave for the, actually, no, that is right. I thought I had the wrong one. So right now, I'm looking, just like I talked about with the market, I'm looking for this fourth wave to correct. And I'm thinking that we have a flat that's developing with this 3-3 and expecting a 5-wave move to the downside in here. So that's what I'm looking for on SMH. I also think that we're in the fifth move to the upside and trying to flesh out 5 waves within that fifth move. Now look at what's happening here with the divergence on the RSI. Okay, so here's what's happening with the move that we had up in here where we went a little higher. Now we went a little higher this last week. It's just not being confirmed by the RSI. So I think that's another, a sign of weakness, and I'm expecting this to come back down. It's really interesting. A lot of semiconductors on Friday, semiconductor stocks on Friday really did act weak, and I thought this was going to become a bearish engulfing candle, but it didn't quite do that. It backed off just a little bit at the end of the day. All right, that's the picture for this weekend. We'll see what happens this coming week. We got a 4-day week in the market. If you felt like the video was helpful, give me the thumbs up. And if you're not a subscriber, hit that little subscriber button. You can also hit that little bell. You'll get a notification when I do publish the videos. And if you'd like more of this kind of information, head on over to joehenches.net. If you haven't read that last post, check that out and check out the membership. All right, everyone, have a great week. We'll talk to you on the next video.